We just mentioned the earnings. We just went through them briefly. You had a beat on the revenue as well as beat on the earnings per share. Give us your highlights from your point of view.
Well, highlights would be the revenue that came in 3% better than a year ago, driven by very strong product mix in North America. And then moving to North America, we earned a margin of nearly 9% at 8.8% on lower volume. We had the best quarterly result at Ford Credit since 2011. We earned a profit in Middle East and Africa, and outside of China and Asia Pacific, we also were profitable, earning a margin of 9%. So quite a number of highlights within the results, but overall, I think we feel like we're stabilizing from what was a tough second quarter and starting to see signs of progress from the work that we're making on fitness, but also the redesign of the business.
So Bob, as you say, a strong story in North America, without a question, partly because of mix. You have revenues up. China, you mentioned, apart from China. That's a big apart from. You had a really rough second quarter. How'd you do in the third quarter, and how are you going to turn that around?
Well, in the third quarter, we lost about $100 million less in China than we did in the second quarter, so a 20% reduction in the loss. We have a number of important launches in the quarter. We have the all-new Focus family that'll be launching this quarter, as well as the Escort, the new Escort, and then an all-new SUV that will be positioned very attractively that comes at the end of the year. So the big product onslaught for China begins this quarter. And then very excitingly, we announced a new CEO for China, a gentleman named Anning Chen, who is the former CEO of Chery. Actually a former Ford guy in his past, but really deep in experience within China, and very excited to have him lead our China operations going forward. So
it's in the pipeline, as it were. What kind of timing are we looking at before you really turn around China to your satisfaction?
Well, we're not putting a timeline on it, but I know that Anning's going to come in, and he's got a very strong point of view about where we have opportunities in the business. And then again, we have a very, very strong portfolio of new products that are coming, not only in China, but also in North America. And so really excited to see him take advantage of that and leverage that, along with an intense focus on cost and capabilities within China.
So what about Europe? What about Latin America? Because those have been challenges for Ford Motor Company. Where are you in those two areas? Two very different areas, to be sure.
Yeah, very, very different. In the case of Europe, we lost about $200 million, $250 million in the quarter. And that was largely around three things. We actually saw headwinds in Turkey. We have a very large operation in Turkey, some macro headwinds there. Also in Russia, the impact of sanctions on the economy there affecting us and the industry. And then we're in the process of launching the all-new Focus family, which is very important to Europe, and so we had launch-related expenses in the quarter. So as we move into this quarter and the Focus starts to gain traction and gets more and more into the market, really looking forward to see the benefit that that provides. In the case of South America challenged very, very much by the external environment, particularly in Argentina, but also in Brazil. So we actually held the loss flat year over year. I think that was a bit of a victory, frankly, given the degree to which the external headwinds were kind of blowing against us in that market in the quarter.
So, Bob, one of the things that's in your release, actually, is that you're going to back off of your targets for both EBIT margin and also for return on invested capital that you had set for 2020. What caused that, and how far off are those targets now?
Well, we're not backing off the targets. We're backing off achievement of the targets by 2020. We're still working very hard, very aggressively to achieve an 8% or better EBIT margin and a ROIC that would be in mid-teens or higher. So we had pulled that ahead in the first quarter based on fitness, but we've seen external headwinds that have gone against us, and also the flow through to some degree of the issues that we saw in Europe and China in the second quarter. Our expectation that we'll improve those businesses, but it will have some impact in achievement of those targets in 2020.
So you've talked a couple times about fitness. There's an $11 billion that you said that you're going to take to really restructure the company. Where are you in that plan? When will we have more details of it?
Well, what we said in the second quarter, and it holds true in this quarter, is that as we redesign the business, we will make announcements when they're ready to be made and share that publicly with all stakeholders. And over time, I think we'll be able to see a clearer picture of the direction that we're heading. We know where we're going. We have a very good idea of the changes that we want to make in the business, but it's very complicated, very complex, and involves a lot of stakeholders. So we believe it's best in terms of our ability to execute that redesign to share things as and when they're ready to be announced.
And the last area, Bob, may well be the most important to Ford, certainly over the longer term. That's autonomous vehicles, electric vehicles, as we move into mobility. You've said you're going to invest another $4 billion in that. Where are you in that process? Because as we've had your CEO, Jim Hackett, admit, you're sort of running second.
Well, I wouldn't say that that we're terribly concerned about where we are versus others. We feel very comfortable about the progress we're making on the technology itself. We actually are also in the process of testing our business models in Miami, and we just announced we're going to take that into Washington, D.C. So I think we feel comfortable that we're on track to launch a commercially viable business around AVs, moving people and goods in 2021, which is the timeline that we've had for quite some time. So I think the progress that we're making is pretty much what we had expected, and we're excited about it.
And can you do that on your own, or do you need partners? You have some competitors who are taking on partners. I know you've restructured your business so that you can at least theoretically bring investment in. Where are you in that process?
Yeah, we've set up what we call AV LLC as an entity where we could potentially partner with others in this effort, and we're certainly open to that. And since we made the announcement of that, we have received interest from a number of different parties. So nothing to announce today, but certainly that is an opportunity and something that we're open to.
There's been a benefit to all the companies, including Ford Motor, because of tax cuts, for example. On the other hand, there are issues with trade, and particularly when you come to China, you have issues with trade. To what extent is that really impeding Ford's progress? I know it's increased some of your materials costs.
Yeah, we have benefited, as others have, from the tax cuts, also from the U.S. Mexico-Canada trade agreement. It still has to be ratified, but certainly that took, assuming ratification, a huge risk off the table for us. We still would like to see that agreement address steel and aluminum because, to your point, those tariffs have affected us to the tune of probably about $600 million this year in terms of higher prices than what probably the overall economic drivers of the market would call for. And then we've picked up another couple $100 million of impact on tariffs to and from China. And then that's also caused us to have to cancel a program that we were going to have a product imported from China into the United States, and that was another $150 million. So probably on the tune of about $1 billion this year is the impact of all of that to Ford Motor Company.
Bob, as we approach the end of the year and you look forward into 2019, which of course you're doing, what do you see as the biggest risk for the Ford Motor Company, and what is the biggest opportunity? What could be the biggest surprise to the upside for your company?
Well, I'll tell you something. I feel so excited about the progress that we're making and the picture that we're putting together in terms of this redesign of the business. You know, I can see where it's going. I'm excited about it. It's going to be substantially different than what it's been in the past. I'm very excited about the traction that the team is getting in North America, because that is the big engine that drives the business, and that 9% margin that we had in the quarter was a great proof point. And we've got all these new products coming forward, both in North America and China and elsewhere, that I think combined with the redesign is going to give us the ability to really rock, and I'm looking forward to that.